is Sean Brodrick, if you don't know who I am. I work for Weiss Ratings, and I have free e-zine that just starts today. It's called Wealth Wave. If you go to the Edelson Institute.com, you can pick that up, and don't worry, I'll put that on the screen toward the end. And I also write a monthly newsletter, Wealth Supercycle, and I write a premium newsletter called Supercycle Investor, which has been doing quite well. And so today we're going to talk about the generational buying opportunity in commodities. And boy, do we have one. All right, I feel a little ashamed for putting up this chart because I know at least 2 speakers had it yesterday, right? However, there's a reason we're all using this chart, and me, I'm a cycles guy, and I follow cycles and stuff like that. And quite honestly, cyclically speaking, it's time for a bull market in commodities. And the reason I call it generational is because, that doesn't work. The reason I call it generational is because right now, we can see commodities are at their cheapest compared to stocks in 19 years. A generation is 25 years. This is close to a generational low as you'll get. And many speakers that you'll be listening to over the course of this weekend think that stocks are going lower. I don't necessarily believe that. I think there's a lot of things that could drive stocks higher. And that means commodities will have to go much higher to catch up. We're seeing inflation work through the system. That'll probably be the next big driver. And so how high can they go? Let me give you my initial target. Now, this is technical analysis, which some people will tell you is a bunch of garbage. There is an old saying that every sunken ship has a chart. And so keep that in mind when you look at technical analysis. But if you believe in technical analysis, then the CRB index, which is a group of 19 commodities, it's heavily weighted toward energy, but nonetheless, most of them are in there, aluminum, gold, and so on. But so the CRB index is screaming bull run and gives us a minimum target of 11% higher. And so stocks which are leveraged to those commodities can go much higher. And some commodities will lead, and where to ride the commodity rally. Now, I am looking for a general commodity rally. Some things will do better. Precious metals. You know, the last time I was here, I was not that big on a precious metals rally, mainly because they'd been snoozing and because my subscribers were making all their money in cobalt and lithium and cannabis, which we aren't going to cover here. And so, but precious metals are starting to wake up again. We're starting to do well on that. Base metals. I mean, there's some great base metal. There are great base metal companies here, and I think you should probably talk to them because the base metals are definitely waking up too. Most of the base metals are moving higher. Energy metals, lithium, cobalt, which are my 2 favorites. Also copper, also graphite, which is not a metal, but it's vital to lithium-ion batteries, and that includes the batteries for electric vehicles, of course, but electronics and grid storage and you name it. Nickel is an energy metal, but there's no supply squeeze in that yet. I'll get to nickel a little bit later in this presentation. Uranium, it's making a historical bottom, and I'll have a chart on that too. Traders don't believe it, basically because for the last 8 years, uranium miners have been telling us that uranium is going to bottom and that the bottom is here, and for 8 years they've been wrong. They aren't liars, they're just optimists. You have to be an optimist to be a miner, otherwise you wouldn't get out of bed and put your pants on in the morning. It takes years to build a mine, you have to be optimistic. But even though they've been overly optimistic, the time is coming for uranium, and I'll talk about that a little bit too. Oil and gas, I'm not really going to cover that here, but electric vehicles won't run traditional energy off the road. According to most estimates I've seen, the number of cars on the road is supposed to double by 2040. So electric vehicles will be a big part of that, but in other places, people will still be driving cars that run on gasoline. Now, the major factor in gold and silver going higher recently is the fall in the US dollar. This is the US dollar yen cross trade, which is more important than the US dollar index. Other people will talk about the US dollar index, don't listen to them. Watch the US dollar yen cross trade because that's a very important thing in currencies. And right now it has been falling out of bed. The US dollar is very close to support in this, by the way. And short positions in the US dollar are now at the highest level since October. So many people will tell you that the downside move is overdone. And I would agree that we're close, but then again, the US government just shut down. I don't know what's going to happen on Monday. I don't know that they can come to agreement. I didn't think they'd shut it down. So why are you even listening to me? I'll tell you. But what happened to drive the US dollar lower recently was a move by China. The China are threatening to slow down buying of the US treasuries. That sent treasury rates higher, the dollar lower, and precious metals higher. That's a 1, 2, 3 thing. And also a big Chinese rating agency downgraded US debt, and now we are starting to see European banks swap out our dollars for the yuan. Not completely, not even in large amounts, but they're slowly starting to make that transition. So we could see more dollar weakness. We could see those levels of support tested. What happens there, I don't know. I don't have that crystal ball. But we have an expectations game going on with Europe and Japan, where they are expected to raise rates faster than the U.S. Federal Reserve is expected to raise rates. So that's going to probably weigh on the dollar, kind of a drag there. We have trouble in D.C., which, I don't need to get into that. And more China, Russia currency shenanigans, which they've already started, and so that's going to go on for a while. What do you buy when precious metals are rallying? This is my little precious metal thing. You buy the smaller companies. Since we saw the last recent bottom on December 12th, we've seen smaller companies outperforming, especially silver miner juniors. That's why I've been putting my subscribers into silver miner juniors, because they're doing well. Why not? And so smaller companies are more leveraged to the precious metal, smaller silver companies, because silver acts like gold on steroids. It's way up, it's way down, Whatever gold does, silver outdoes that. So naturally, the silver juniors will definitely outdo it. That doesn't mean you don't buy gold juniors. Sure, we buy those as well. But for real outperformance, that's where I would look. And also, you might want to look at those companies who can reap the benefits of changes in the U.S. tax laws and weaker EPA and Bureau of Land Management regulations. Let's talk about uranium. All right, price of uranium went up 17% in 2017. That's only the third time uranium prices have gone higher in the past decade. It's the biggest gain in 7 years. And yet, prices are still 67% below the 2011 peak. By anyone's standards, this is a bottom right here. Now, you folks in Canada are uniquely positioned because you have all these uranium juniors, which we in the US don't have access to easily. You can buy them, but sometimes, they're on the gray sheets. You don't want to do that. So, along with Cameco, which is, of course, the big cheese in the uranium space, you have all those little juniors, and as prices go higher, we'll see consolidation in the uranium space. What that means is that big companies will buy smaller ones. So, buying a few lottery tickets in the Canadian junior uranium space is not a bad thing to do. The last time we had a uranium bull market, my subscribers made a lot of money that way because it was one after another was taken out. Bam, 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 and we owned them. Base metals, synchronized growth around the world. Copper's already up 70% since early 2016. People say, how the heck can it run higher than that? Yes, it has plenty of room to run. Zinc, too. Synchronized global economic growth is driving copper, zinc, aluminum, nickel, and more. Now, the electric car boom is adding some juice to this, okay? It's making some base metals more equal than others. But overall, copper demand this is one view that I have here, and of course, since I'm bullish on copper, I choose the most bullish view. You can find other views, go right ahead. But according to a big Indian company, which does a lot of copper stuff, they expect copper demand worldwide to jump another 22% in 5 years. So, one of the things shifting copper higher is electric vehicles, okay? There is no copper in lithium-ion batteries, but fully electric vehicle cars can use 3 to 4 times the copper of a regular car. It's all the wiring. They need all the wiring, right? And copper's the thing to do it. So, copper per electric vehicle can range from 240 pounds to 465 pounds per car. That is a lot of copper, and that can really drive it big time. So let's talk about energy metals, since I have that little transition, okay? The rise of the electric car. Now, the International Energy Agency says the total number of electric vehicle cars on the road jumped from 1 million in 2005 2015 to 2 million in 2016. And then the 2017 numbers came out, and it's 3 million. And every estimate for the adaptation to electric vehicles has been on the low side. They just keep moving higher and higher. The reason is China. China wants to stop having air so thick they can eat it. And so they're really making this big push, and the world's car manufacturers are following along in that. Now, electric vehicles ramp up lithium demand. Even though the price of lithium is going up, economies of scale in manufacturing are sending battery prices lower. So when I talk about a lithium bull market, cobalt bull market, people say, well, that'll make the price of electric vehicles unaffordable. No, it won't. That's the funny thing, because they get better and better at making these things, and it's still a new industry, so they're actually becoming more efficient, and so therefore the prices are actually going down. The cost of a lithium-ion battery is now just 1/7 of what it was 5 years ago. The price of lithium could go up 1,000%, and the price of the battery would only rise 8%. There isn't much lithium in a lithium-ion battery. We'll get to that in a little bit, too. So, on the left is the price of lithium. On the right is a chart showing how much lithium was consumed in 2016. Well, 50% of all lithium went to energy storage. That's up from 30% just 2 years earlier. Demand for lithium is projected to mushroom over 300% within 8 years. Now, and yet, if you pay any attention to the lithium markets, the last couple weeks have been brutal. Stocks have sold off hard. Why? Because of a couple of things going on. There are some deals being made. SQM, which is the New York Stock Exchange symbol for a company called Sociedad y Química Minerale, so you can see why I call it SQM. That's the big Chilean lithium producer. And it just struck a deal with the Chilean government after years of fighting to work out a deal on taxes, and basically SQM will be able to double its production. At the same time, new projects in Australia are coming online, and at the same time, there's a company called Cobre, which is also working down on the lithium triangle down in South America, but it's on the Argentinian side. That just struck a deal with Toyota, which is going to pay for Cobre to double its production. So people are saying, well, look at all the supply coming online. We don't need these stocks anymore. Let's dump them. However, it takes a long, long time to bring new mines online. It takes a long time to ramp up production. This thing isn't done overnight. The next few years, the squeeze will be quite acute. Global demand will grow by 75,000 metric tons in the next 2 years. New supply is expected to be only 25 to 30,000 tons. So we're probably still going to see upward pressure in pricing. Now, we'll probably see prices bounce around in China, where this stuff is priced and it's still not traded on an exchange, so what the heck are you going to do? But Joe Lowry knows the stuff, follows it very closely. I talked to him, and he isn't worried about this at all. So that means the pullback in lithium, that's about the only buying opportunity you're going to get this year. Cobalt demand, let's talk about that a bit. 4.8 pounds of cobalt in one Tesla Model S. Most of the world's cobalt comes from the Democratic Republic of Congo, which is not very democratic, but nonetheless, it's a terrible place, terrible place. And the mining conditions are just awful, and yes, they have all those things there, so people are looking for other places to source their cobalt from. And also, the DRC is raising a tax on cobalt from 2% to 4%, or maybe 5%, it all depends. And so the race is on for new sources of cobalt, and I think we're going to do very well because of that. Now, the cobalt market is in a 5,500 ton deficit. Global supply is actually contracted in 2016. There's only one cobalt mine coming online this year. My subscribers already own it. You can too. We're up 340%, and I didn't recommend that until well into the run. It's up about 800% from when I talked about it at a money show last February. So you might say it's overbought. On the other hand, it's the only cobalt mine coming online, and I'll talk about that in a little bit too. So far, the forecasts are for a worsening deficit, and we'll just have to see how that goes. But if there's a worsening deficit, that means that select miners are in the catbird seat. Nickel, let's talk about nickel. I don't expect nickel prices to move much this year. I don't think I'm alone in that. There is 5 times more nickel in a Tesla S battery than there is cobalt, but there's plenty of nickel supply too. However, longer term, we are going to see that supply-demand squeeze, and so course, in the longer term, we're all dead. But nonetheless, prices will move higher. So keep that in mind. So how big could this energy metals party get? If everything went electric, and I'm not saying it will. This is, of course, one of those things that we just talk about when we're shooting the bull about what if everything went electric. If it did, we'd see lithium demand surge 2,898%, cobalt demand rise 1,928%, rare earths up, graphite up, nickel up. So in other words, it would be huge. I don't know what the final percentages are going to be, but I know over the next 5 years, there's going to be tremendous demand in all these things. So let's talk about China a little bit. It puts the zoom zoom and the vroom vroom. It's Chinese policy that is driving this market. They are mandating that car manufacturers make a certain amount of electric vehicles. They are giving and extending tax breaks for electric vehicles. They actually call them new energy vehicles over there, not EVs, but NEVs. And so just the estimates of what is going to be sold on the Chinese roads that is electric is just astounding. So there's a lot of growth there, and maybe more than many people think. The chairman of BYD, which is one of the big makers, told the press that all new vehicles in China will be electrified by the year 2030. Now, maybe he's talking his book, or maybe he knows something because he's well in there. Yes?
Does that mean hybrid included in that?
Yeah. All right, picks and energy metals. True confession time. Last time I was here, I recommended Altura Mining and Mason Graphite. One is up 20%, the other's down 16%. That's not very good. That's terrible. I'm ashamed. However, my previous picks, we saw Lithium Americas. That's up 98%. We were up 140%, but the last couple weeks have kicked the stuffing out of us. Katanga Mining, that thing's a tank. It never seems to pull back much. It's up 330% from where we recommended it. So, is the energy metals boom done? My recent picks, or the picks that I give this conference, I should say, are not doing as well as some others done, or is there much more to come? Naturally, the reason I'm standing here, I think there's much more to come. Here's a couple of picks. These are cobalt picks, basically because I think cobalt's where the price squeeze is going to be. That doesn't mean I don't like lithium. There's a nice lithium company here, Advantage Lithium. You guys have been listening to him and stuff like that, right? I like that company a lot. Go and talk to the guy. He has a great story. He's in the right part of the lithium triangle. It's not like I'm against lithium stocks at this point, but I think that cobalt stocks definitely have some real potential here because the car manufacturers have to source new cobalt for all the electric vehicles that they say they want to build. We see Ford investing $15 billion, saying they're going to roll out 40 new models in the next few years. Where are the batteries for that going to come from? There are 25 mega factories like the big one that they have in Nevada, only around the world, and you don't know much about them because they're in China and places like that. They're also in Europe. But those are all going to be building lithium-ion batteries. Where are they going to get the cobalt for those? There is some tremendous demand going on here, some tremendous price demand pressures, and it's probably going to resolve very well for small companies that have blue sky deposits that are near enough that they can be mined, and so those are the ones that I'm looking for. Fortune Minerals. We already own this one in Supercycle Investor. Has a, small market cap. It's advancing a cobalt, gold, bismuth, copper project in the Northwest Territories, and there's an all-weather road being built there, which will make it much more accessible, and its feasibility study is being updated. I think when that feasibility study comes out, we could see some real action in that stock. Another one is Castle Silver Resources, and the name confuses everybody, so they're changing their name to Canada Cobalt Works. Now, there's a great silver camp called the Cobalt camp. This makes it even more confusing. I don't want to get too deep into it. But the two metals often show up. And they have an old silver mine, which was also a great cobalt producer, and in fact still has plenty of high-grade cobalt. And that's not their only project. They have two others around there that are quite good. And so I own this one personally, so you can take or leave this as you like it, but it keeps going up. So I gave you one that got pulled back with the rest of the energy metal sector, and one that is just, it seems to be a bull and it keeps running. Look at either of those. They both have potentially significant upside. That's me. I write Supercycle Investor, free e-zine, Wealth Wave, just launched today at the EdelsonInstitute.com. I have a monthly newsletter called Wealth Supercycle, and things are looking up, and thank you very much. I have 25 seconds. I'll take one question. Anybody got one? Oh, wait. Let me also mention that I'm going on a cruise in May with that gentleman and that gentleman, and it is going to be great fun. We are going to talk about metals and mining, and we'll be stuck on a boat, so you can chase me around, and I can't run away. How about that? But the really fun thing is if you speak to Winston here, you can find out about it too. It's in Europe. It's going to be cool, and that's all the time I have. I won't tell them what my wife said, except that we'll get divorced if we don't go on the cruise. So there you go.